The major U.S. stock indices are trading mixed in today, with the Dow Industrial Average, the Dow 30, leading the way with a gain of about 0.65%. The S&P index is unchanged on the day, just down minus 0.6%, while the NASDAQ index is down minus 0.65% in trading. I'm going to focus this video on the NASDAQ index because some of the key technical levels are in play for that indice. And I'll explain what the bias is, where the risks are, what the targets are in this video. So let's get started. I'm going to keep it really simple, folks, by taking a look just at the daily moving average. And what I notice on this daily moving average is that on Tuesday's trade, the market gapped to the downside. And in that move to the downside, we fell below this blue line. This blue line represents the 100-day moving average. The last time the price fell below it was here. We moved lower and then moved back above it, and that started this rotation to the upside over here. We gapped below the level again and stayed mostly below that level, then gapped again here, rotating all the way down to the 200-day moving average, a green line right here, before rotating to the upside. Notice here that we gapped above it, and then we started this move to the upside right through here. So this 100-day moving average is a key barometer for both buyers and sellers. We've been staying below it for the most part over the last 3 trading days. We did try to break above it in trading yesterday, but what did we do? We found resistance sellers right near the gap or the close price from Friday's trade, and that kept the sellers more in control. Plus, we moved quickly back below that level. So buyers had their shot, they missed, and we rotated to the downside. So it's easy to say that the bias in the short term below the 100-day moving average is more bearish. Stay below it, and we can probe to the downside. Now, what makes me a little bit cautious and gives me this idea that maybe the buyers and sellers are battling it out is if I put a red box around this area right through here, and if we look at the highs right here, the high price came here, here, here. We got close to it here, and we got close to it here. So this is like 3 separate highs that came up, and found resistance sellers, selling pressure up there at the highs. Now down here at the lows, what did we do? We broke above this area right through here and found a move to the upside, and then we rotated back down, and we came down to this area once again and found support buyers, moved back to the upside. We ultimately moved back down to this area over the last few trading days. So we're testing this level not once but twice right through here, and that's going to be a key support level going forward. So if I were to characterize the market, I would say sellers are leaning against a 100-day moving average. Buyers are buying against the swing area right through here, and it's going to be whoever wins this battle is going to see additional momentum either to the upside on a move back above the 100-day moving average, or to the downside on a move below this swing area. On a move to the downside, the next key target would be the 38.2% retracement. That's of this move up from this low right here to this high right here. The 38.2% retracement comes in at 18,487.09. Below that, and we'll start to look toward the 200-day moving average. That's a green line in this chart. Remember, back here we fell below that 200-day moving average, but quickly rebounded, and that started this rotation to the upside through here, which didn't really stop until we reached way up here. So that 200-day moving average would be another target on the downside. But in the meantime, what do we have? We have a battle going on. The battle is between the 100-day moving average at 19232, and then support down here near the 18832 level. We'll see whether the buyers or sellers win this battle, but those are the key levels in play. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.